Ladies and gentlemen, good day and welcome to the Wonderla Holidays Q3 FY24 earnings conference call hosted by Monarch Networth Capital. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal the operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rahul Dani from Monarch Networth Capital. Thank you, and over to you, sir.
Yeah, thank you, Darwin. Good afternoon. On behalf of Monarch Networth Capital, we're delighted to host the senior management of Wonderla Holidays. And we have with us today Mr. Arun, the Managing Director of the company, Mr. Saji, CFO, and Mr. Dhiren, Chief Operating Officer. We will begin the call with opening remarks from the management and then move to question and answers. Thank you, and over to you, sir.
Hi, good afternoon, everyone. This is Arun, MD of Wonderla Holidays. Thanks to everyone for joining the call. I extend a warm welcome to all of you to discuss the Q3 and 9 months of FY24 results. Along with me is our CFO, Mr. Saji Lewis, and our COO, Mr. Dhiren Chaudhary. We continue to strengthen our management team, and I'm happy to announce that the appointment of Saji K. Lewis as CFO of Wonderla. Saji is a chartered accountant and brings with him a rich experience of over 15 years, spearheading end-to-end finance and account functions, entailing business, partnership, business controlling, compliances, etc. On behalf of Wonderla, I extend a warm welcome to him. We also have Mr. Dhiren Chaudhary, our COO, who's joined us since June last year. He has a strong background in operations from companies like Zomato and Red Bull. He's also an INSEAD MBA alumni. Pleased to have these two colleagues with me. I'm pleased to share the results that we have had as a quarter, marked by several key achievements and positive financial results. Our revenue from operations for the quarter stood at 123.6 crores, representing a 9.2% growth over last year's quarter. We are consistently growing in terms of both volume and value. Our marketing efforts have played a pivotal role in driving awareness and is reflected in footfall in our parks during the quarter. We have successfully executed different formats of marketing campaigns during festive season for Diwali, Christmas, and New Year, along with concerts like Sunburn at Kochi and New Year event at Hyderabad Park, contributing to overall footfalls during the quarter. Footfalls for the quarter stood at 9.45 lakhs, an increase of 3% YOY. And for the 9 months FY24, footfalls stood at 25.43 lakhs, an increase of 1% YOY. This reflects the growing popularity of our attraction and effectiveness of our marketing efforts. ARPU for the quarter stood at 1,256 rupees, an increase of 6% YOY. And for 9 months FY24, the ARPU was 1,452 rupees, registering a growth of 15% YOY. The increase in ARPU is mainly driven by healthy growth in non-ticket revenue, along with encouraging response from walk-in groups and all aspects of our customer base. We have seen an approximately 35% contribution of non-ticket revenue for the quarter, against 25% in the last year. In line with our commitment to innovation and growth, we have successfully launched new rides during this quarter in Hyderabad, which has been very well received by visitors. Additionally, our expansion plans remain on track and of opening parks in Orissa and Chennai. We have signed an MOU recently with Gujarat government to establish Wonderla as a tourist destination in Gujarat. This strategic move is aimed at tapping into new markets and further diversifying our revenue stream. Looking ahead, we remain optimistic about future growth. We believe our continued focus on guest experience, innovation, and expansion will drive sustained growth. We appreciate the dedication of our team members, our loyalty of our customers, and support of our shareholders. Now I request our CFO, Mr. Saji Lewis, to delve into the financial results of the quarter. Thank you, Arun, for introducing me and giving me an opportunity to be part of Wonderla family. Looking forward to build the company's growth journey together. Good afternoon, everyone, and thank you for joining us for Q3 FY24 earnings call. I will provide a brief overview of the financial performance of the quarter. On quarterly performance, the revenue including other income for the quarter stood at 129.5 crores as against 117.7 crores, up by 10% YOY. EBITDA for the quarter stood at 60.4 crores as against 61 crores, marginally degrew by 1% YOY basis. EBITDA margin stood at 46.7%. Profit after tax for the quarter stood at 37.3 crores, down by 4%, and tax margin stood at 28.8%. Moving to 9 months financial performance, our revenue including other income for 9 months FY24 stood at 401.1 crore as against 339.7 crore, an increase of 18% YOY. EBITDA stood at 209.5 crores, up by 18% YOY. Our EBITDA margin stood at 52.2%. Profit after tax for 9 months FY24 stood at 135.3 crore versus 113.8 crores same period last year, up by 19% YOY. PAT margins for 9 months stood at 33.7%, up by 20 BPS YOY. I now request the moderator to open the forum for question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Angad Kattare from Samiksha Capital. Please go ahead.
Good afternoon, sir. My first question is related to your comments on the Bhubaneswar Park. You are guiding it to open in Q1, 3 months earlier. Can you just tell us, will it be in the first half of Q1 or will it be in the second half? Will we utilize the full Q1? That's my first, and the follow-up for that is, can you give us the timeline for the Chennai Park as well? How's the progress going on?
Thank you for the question. So we are hoping to open Bhubaneswar Park in the later half of May. So we will definitely not get most of Q1. We expect to get whole of June and maybe a little bit of May. Towards the end of May is when we are planning to open it. Earlier we had planned that we might open only in the third quarter. So, but we are happy that we are able to open in the first quarter. Now, regarding Chennai, we hope to open the park in the third quarter, second or third quarter of FY26.
Okay. And sir, what is the overall capex that we have spent on the upcoming 2 parks, and how much is still pending?
For the Bhubaneswar Park, we are our plan is to spend about some 189 crores, and we have already spend about 140 crore with respect to the Bhubaneswar Park. Chennai Park, we are starting only the land and other things we already procured. Other than that, other expenses are yet to begin, which was about somewhere close to 80 crores.
Okay. Sir, we are seeing one of our competitors getting aggressive in expanding operations with their recent announcements to expand to Indore and other states, where we are also, planning to put up a park in the near future. Any comments on the development of the new park planned in MP?
I don't know what is their plan. Currently, I'm not aware of. I think they have a couple of parks which they already had. They've integrated into one company, but they are much smaller parks than ours, and I don't know whether we'll be directly competing with them. Our offering in Indore will be large format amusement parks, not small parks. So we'll have to wait and see, but we are not really worried about that.
Thank you so much. I'll get back in the queue.
Thank you. The next question is from the line of Jaiveer Shekhawat from Ambit Capital. Please go ahead.
Sure. Thanks for taking my question. My first question is related to Odisha Park. Given that you're near commissioning, could you talk about your pricing and marketing strategy here?
Pricing, roughly we are looking at an ARPU of roughly 1,000 rupees. And marketing, because it's a new park, I'm sure we will be spending a lot on that, and we will make sure that it gets the proper reception it deserves. Also, the government of Odisha has been very, they've literally championed our project. So I'm expecting a lot of synergies to unlock with Odisha tourism as well. We hope to capitalize on a little bit of the summer season, even though we may not be able to get all of it. We will hope to get the last bits of May and then whole of June onwards. I think our park should be open. That's the current planning. We will keep you updated as more information becomes available.
Sure, and that helps. Secondly, if I look at performance of footfalls at Kochi and Bangalore, there's a clear divergence. So, one, what's driving 10% plus growth in footfalls in Bangalore, and what's the reason behind decline in footfalls at Kochi? If you can explain that.
So Bangalore is trending as expected in terms of footfall growth. Cochin, we didn't have good footfall growth in Q3, mainly because towards the end of December we had a slight COVID scare in Kerala, and I think the public in Kerala react to these kind of adverse news a little more than other two markets. So if you look at the footfalls in Bangalore and Hyderabad, they've grown, but Kochi has degrown. So mainly it happened in December. Saji, you can give some more details, anything.
Yeah, Cochin, there is a slight dip in the footfall for the quarter ended. But if you see the 9 months ended also, there is only slight minus 4% dip in the footfall. This is whatever our MD has indicated. This COVID scare and that is actually resulted in a dip in the footfall.
So assuming that it was largely because of, say, one-off events, there were bomb blasts as well, plus the COVID scare as well. I mean, how do you see the revival of footfalls from next year onwards at Kochi? And then what's your expectation for Bangalore and Hyderabad as well?
See, these are all mature parks, so we are not expecting huge growth in footfalls here, but we should be able to manage 3 to 5% footfall growth if you look at the whole year. Bangalore is outperforming right now, and the hope is that we can outperform even in Hyderabad. Hyderabad footfalls are actually lower than compared to Cochin and Bangalore, which we feel is an anomaly. We hope to correct it in the next year.
Sure. And if I think of ticketing revenue growth and non-ticketing revenue growth, again, there is a good divergence there. So one, what's behind the muted growth in ticketing revenue? And secondly, I mean, what's really driving the mid-teens kind of a growth in your non-ticketing revenue? And what's your outlook here?
So if you compare to look at ATP growth, we have grown by I think 6% in ATP. The reason is this year I think during Q3 we had a higher contribution of groups as against retail footfall in FY23. So that's the main reason. The reason for better performance in NTR is because we've been focusing on that, and I think our NTR now comprises almost 35% of our revenue. If you look at Q3 compared to 25 to 26% in the last corresponding period of last year. So there is a clear 10% improvement in terms of contribution from NTR, and this is something that we've been talking about before as well. We hope to continue in this path.
Sure. And my last question to you, Saji, is can you explain the reason for substantially higher OPEX during this quarter on a both YOY and quarter-on-quarter basis in the other expenses?
Yeah, the variance in the expenses are mainly because of the salary as well as for the off-roll employees cost. There is about 20% hike in the employee cost with respect to the outsourced employees, where we have about 10% of salary rate hike and then 10% of count hike also happened in the current year. If you see the total hike, some 36% of my hike is happened in the operational cost, which is mainly because of the reasons whatever I already told. Another one is 20% hike happened with respect to the employee cost. This is mainly we have recruited about a net of 60 people in the company, which has resulted in an increased expenses in the current quarter and even in the 9 months ended period. Other than that, we have done an additional advertisement and then sales promotion activities, especially during the festival season, which has resulted in little, and even we have performed certain events also in the parks, which has resulted in certain additional expenses for the marketing activities as well. Other than that, there are no other surprises in the expenses. 9 months also almost similar reason. Other than that, there are no other exceptional reasons for the quarter as well as for the 9 months.
Sure, understood. Team, wish you all the best for the Odisha park.
Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may please press star and 1. The next question is from the line of Prakash Soni from Value Research. Please go ahead.
Yeah, hi. Thank you for taking my question. So my question is related to the events which you said have been organized at the parks. So just to understand, have they contributed to overall profitability, or because they have contributed certainly to the expenses, as you said, they have gone high because of the marketing and
it contributes to footfalls for us. You've seen growth in footfalls, right?
Yeah, so that is due to the events what have been organized.
It's actually sum total of not just events, it's all the marketing effort that we have done. So there are two parts to our marketing cost. One part is all events and all that, and then there is advertisement cost, and then there is also commissions that we pay out to our agents for group footfalls. All those things have gone up in line with the footfalls, and we had a higher percentage of people coming from groups, and which has led to a higher payout as commission. So all these things are put together in that cost.
So going forward, any guidance you can give us on the margin side? Will they continue to stay in this?
We are already at peak margin last year, so it will be slightly lower as we have new parks coming into play, and we'll be adding employees to our fold. So margins, it's come down by 3 or 4% this quarter. That may continue for the next few years, because we will be adding further people into the system, and also marketing and promotion costs also will be in line. I mean, it will only be going up as we have new parks to be launched, etc. But on a steady state basis, the kind of margins that we are seeing, we hope to maintain our EBITDA north of 50%.
Okay. And just one question related to the Odisha park. As you say that it will be functional in first quarter, second half of the first quarter. So are we already, when do we look for the stabilization of the park and a good revenue churn from there?
The first 6 months of the park will obviously be in the launch phase. After that, we can see stabilization.
Okay. Thank you.
Thank you. The next question is from the line of Chandresh Malpani from Niveshaay Investment Advisors. Please go ahead.
Hi, sir. Thank you for the opportunity. So, sir, my first question is on our expansion strategy. So, we are expanding into Bhubaneswar and Chennai, but what would be your outlook on this government's thrust to promote these religious places? So, are you looking to expand in those regions as well? And secondly, sir, on the Gujarat, that MOU which we have signed, where would the park be set up?
We have been approached by UP government to set up parks in the religious centers which are upcoming, like Ayodhya and Varanasi. But we are still considering it, not yet decided, because our parks are large format parks. We need to make sure that there is enough catchment for us to make sure that it's worth the investment. The Gujarat investment will come between Ahmedabad and Gandhinagar, maybe close to GIFT City is what we are looking at.
Okay, and sir, our expansion would be asset light only going forward.
It will be a mix of asset light and asset heavy, depending on the geography and what kind of land parcels are available. Some state governments are very proactive and they're giving us land practically free, like in Bhubaneswar and Indore. But other places, like for example,
NCR, we are looking at this thing for project as well. There we will have to invest in land. So it just depends on the geography. I think tier 1 or tier 1 cities, it will be hard to find land on lease. But if it's available, then we are also open to doing that.
Okay, sir. And lastly, what would be your target footfalls and ARPU for FY25 considering Bhubaneswar plant coming in early? So any guidance on that part?
Yeah, for the existing park, you can consider about some 5% growth we are expecting. And then for the Bhubaneswar park, maybe around some 5 to 6 lakh.
5 to 6 lakh?
Yeah, in a year.
Okay. Okay, sir. Thank you, sir.
Thank you. The next question is from the line of Richa from Equity Master. Please go ahead.
Sir, thank you for the opportunity. I'm actually new to the company, so kindly bear with me. You had in the earlier calls perhaps mentioned the plan for resort expansion as well in Hyderabad and Bangalore. So, I mean, could you just give an update on that?
We are in the process of expanding our resort in Bangalore. We are adding 40 rooms to the resort, and we are also adding an adventure park and a MICE and convention center. This will take about a year to complete. So only in FY26 we can expect the effects of this. We are going to use the next 1 year for construction. Total investment we are looking at between 70 and 80 crores all put together. And then with this we'll also have a large convention center in Bangalore, which we don't have currently, and also an adventure park, which it's something new that we are doing. Once these projects are stabilized, then we will look at replicating them in Hyderabad, which is our next candidate to do a resort project. But we will do it only after FY26.
Okay. And sir, your Chennai park is, I think, almost like Bangalore when it comes to size and drive. So, I mean, going by historical experience, once you launch a park, how much time does it take for it to, get the kind of footfall that a mature park gets?
The full footfall ramp up for a new park will take about 2 to 3 years. But, I mean, we are expecting all our projects to be EBITDA positive from year 1 itself. Thanks to our very efficient way of constructing, and also because we manufacture a lot of the rides and technologies ourselves. It's our own, we are vertically integrated to an extent where we actually design the park and make rides in-house. So because of that, I think our capex cost will be much lower than competition, and this is why you're seeing high EBITDA margins in Wonderla. So that will continue, and that will help us reduce any potential losses. And also the fact that we are using an asset-light model. But in Chennai, we have actually bought land, and we have built it as a greenfield project. But we do expect Chennai to give good Bangalore levels of performance after the ramp-up period. So we should be able to cross 1 million plus footfalls within 3 years. Or maybe even earlier than that. And also ARPU will be comparable or even slightly higher than Bangalore.
Okay. And sir, my last question is, these event-based revenues like Sunburn and all, are they getting captured in your metrics that you share for footfall and ticket? And if yes, where exactly do they get captured in those metrics?
This will come in non-ticket revenue because ticket revenue, if tickets are being sold, it will be done in it will be added as tickets, but otherwise it will mostly come in non-ticket revenue for most of the events.
And footfall is also capturing these event-based footfalls that are there.
Only if it's a unique footfall. Sometimes we do get people who buy the tickets and for the park and event together, so we don't duplicate that footfall. It will be shown as a unique footfall.
Okay. Thank you so much, and all the best.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may please press star and 1. The next question is from the line of Angad Katare from Samiksha Capital. Please go ahead.
Sir, what will be the split of group and walk-ins for the quarter, and also the ARPU split for this quarter between ticket and non-ticket? That will be helpful, sir.
The 56% is the group, and then balance is the general in the quarter.
And for the ARPU, sir, ticket and non-ticket?
ARPU is generally 1,256 for the quarter, which is ticket revenue will be somewhere close to 890, balance 366 will be the SPH. Non-ticket revenue. Non-ticket revenue is 360.
Okay. Okay, thank you, sir.
Thank you. The next question is from the line of Monish Gotke from HDFC Mutual Fund. Please go ahead.
Hello. Thank you for the opportunity. So whenever we plan a new park, what kind of payback period do we target? Payback period and return ratios?
See, our payback period is between 7 and 8 years, full payback. That's the kind of rough estimate. It could vary a little bit depending on how quickly the footfalls ramp up in the park.
A satellite model will have a lesser payback period. If you are purchasing land and then constructing a park, it will have like the MD said, some 8 to 9 years it may take. But if it's a satellite model, maybe some 4 years or something like that, you will be able to break even. I mean, payback will be within 3-4, maximum of 4 years or something like that.
Okay. And so what would be like replacement of rides which we have to do? So what would be the typical maintenance capex which we have to do on an annual basis, or let's say per park, if you can share? I mean, typically, like in a park, there will be a introduction of new. Yeah.
We will roughly spend about 10% of our top line, but next financial year it will be slightly higher because I think we're spending about 30 crores in Bangalore and I think 15 crores in Kochi, right? Yeah. So I think about 45 crores is roughly the 45 to 50 crores we will be spending.
So this will be spent on an annual basis, right? Just to maintain the rides or to introduce new rides.
All the existing parks will get 10% of capex to add new rides and repairs, maintenance, not repairs, but any addition to the park in terms of restaurants or new rides, anything new facilities.
Okay. And so what is our medium to long term strategies? Like we will be like expanding this park. Like what are the plans? Like going and getting into adjacencies like maybe a water park or theme park. So what is your thought process overall, if you can share?
We are already doing water parks and resorts and everything. Our immediate goal is to do geographical expansion because right now we only have 3 parks operational and 2 under construction. We want to be in about 10 cities we should have concrete plans of being in 10 cities by within the next few years, and that's the plan. Of course, then we are also looking at how we can leverage technology. We are investing a lot into that in terms of how to use the data that we collect and how to improve customer experience and revenues for us. So these are the 2 kind of broad strategies from our side.
Okay. And so any so I have recently started tracking this, so I'm not very much knowledgeable on this industry. But if you see, let's say, a tie-up with some foreign company, let's say Disney or something, just to have those technology of rides and all, have you explored it?
We are not looking to see. Disney usually doesn't tie up with any other company. They will do their own parks, and those are very, very expensive, not workable for a country like India. So, I mean, if there are other IPs in terms of technology, if we feel there is a need that we can, leverage on it, we'll definitely be open to it.
Okay. Okay. Thank you, sir.
Thank you. The next question is from the line of Ranodeep S. from MAS Capital. Please go ahead.
Thank you for the opportunity. So I just wanted to understand, you mentioned the near-term aspiration is to be in 10 cities. So wanted to understand, do we have some thought around how many will be tier 1 and how many will be tier 2? I understand tier 1, you look at 400 to 500 crore capex, and tier 2, you look at around 150 to 200 crore capex. So any split of the 10 cities that you're looking at?
We would like to do more tier 1 cities, so wherever possible. So for example, we are looking at NCR. We would like to do something in Bombay, between Bombay and Pune also. in Maharashtra, and we are looking at other big cities, maybe like Kolkata, but we have not really finalized the places yet. Depends on what we find in terms of land acquisition.